AMD just reported earnings and it basically came in line with expectations. It beat earnings by just a bit. And there's two ways to check that. Maybe go on Yahoo Finance. I find it pretty easy to check stock earnings, or you can go to TradingView and click the little E here, which comes from earnings and revenue. And you can see that it came in line with expectations, although the stock jumped almost 3%. So we're going to try to find a fair value price to pay for AMD. And I'm going to show you the quick way and the not so quick way. The quick way is use this guy's channel and site, everythingmoney.com. They have a YouTube channel. I learned a lot from them, and they make it very easy to find and evaluate stocks. They are basically just like Yahoo Finance or Seeking Alpha. Quick tip: if you use Opera GX, you can force dark page, and you don't blind yourself. All right, so going to AMD, we can see they have increasing revenue. It jumped a lot since the pandemic, and that's a concern that they might not sustain these levels. And as you can see, in the last 12 months, they did go down a bit in revenue. You can check everything from balance sheet, from cash flow, but they make it very easy. They have these so-called 8 pillars, and what they look into a stock is to have net income growth, revenue growth, free cash flow growth. Something very important: shares outstanding they should not issue many shares outstanding, although for AMD I think this is okay because of their valuations. If you take this 5-year PE ratio, means that if you take all the earnings and bring them to today, maybe like an average, something like that, and you take the market cap and divide it by that average, you get a PE. So this is the 5-year PE, and this is the trailing 12 months PE, which is very, very high. AMD is pretty expensive, in my opinion. So it should drop, let's say, maybe in the $30 range in order for me to consider it a buy. They have a page here with analyst estimates, and you can see what analysts forecast. But as you can see, there's only 3 or 4 analysts that estimate earnings or revenue from 2026, so take it with a grain of salt. And they also have a stock analyzer, and I'm gonna show this at the end of the video because we're gonna do the hard way first. This is basically discounted cash flow price. You know, you take all the potential cash flows from the future, and you're gonna get like a price to pay today. What price should we pay today? So we can use for the hard way. I mean, you have to pay for this software. It's not free. So you're probably gonna do the hard way first, unless you find it okay to pay for the subscription here. You can either use Yahoo Finance, but I honestly prefer Seeking Alpha because it has a little bit more history. As you can see, they go back like 4 years. Seeking Alpha goes back 5 years. So you have a little bit more data to use. So we can see their revenues. So let's go with annual first. Or we can just use this for the hard way. Why not? Because it's better. And they also calculate the free cash flow for you. So we're basically gonna do the hard way, but pretty easy. We have to calculate the last 5 years free cash flow average. How do you calculate free cash flow? Well, you take the cash from operations and you subtract the capital expenditures. So as you can see, 2.4 billion minus 0.53 billion, you get 1.87 billion. So you go back 5 years, 1, 2, 3, 4, 5, and you get every single cash flow value. As you can see, they have this line added. Yahoo Finance also has it, but it only goes back like 4 years. And it's not accurate, because as you can see, their operating cash flow is 3.5 and the free cash flow is also 3.5 billion. That means they have no capital expenditures. Well, they do. So something is not okay here. That's why it's better to manually calculate it. In Signal Alpha, you can go to the cash flow tab and you can get the cash from operations and subtract the capital expenditures, and you will get the same numbers from here. So that's it. Then you do the average, and let's say for a company, maybe start with a multiple of 15, right? So for AMD, their average free cash flow in the last 5 years was 1.62 billion. So you get that in your calculator, 1.62, and for starters, multiply it with 15, right? What you will get is the market cap you should pay for AMD, right? Their current market cap is a lot higher, let's call it 190 billion. So what you do now, you get this 24.3 and you divide it by 189.45, let's be accurate, and you get this, let's call it 13%. So what price should you pay for AMD? Basically 13% of the current share price. So 0.13 divided by 117.6, about $15 per share. Just looking at the cash flow and nothing else. Because again, if we use this quick pillars, AMD doesn't really have much debt. That's really nice. It has an okay return on invested capital. They are growing cash flow, net income, revenue. This line right here is the long-term liabilities divided by the last 5-year free cash flow average, right? So they don't have this should be less than 5, and it is. So they do not have that much long-term debt. Their only problem is the high valuation. That's it. And also I do like AMD processors and graphics card. I own both of them. Actually, my desktop PC is fully AMD, but the problem is that you have to pay a really high price for the stock. Separate the stock from the company. They have really good products right now, but they are overvalued. That's the only problem. Now, for the easy way to get a price to pay for AMD is to use their stock analyzer tool, and for that you need to assume some growth. And you have estimates from analysts, and you also have historical growth. As you can see, this is kind of 15% growth. We'll go with that on the high side because that's what they did for the past 10 years. Actually, let's go with 18%, which is crazy amounts of growth. Crazy amounts of growth, right? Because as you can see in the last year, there's barely any growth. And actually, it kind of went down a bit. So maybe that needs to update. But on the low side, I'm not gonna assume 15%. So let's do 12 and 6% revenue growth. Profit margin, this is the problem with AMD. It doesn't have a great profit margin. It has a pretty good gross profit margin, but it has a pretty bad profit margin. That's the issue. So let's assume on the high side 12%. On the low side, go with 6% and 9% in the middle, which again would be better than what they did in the past 10 years. Free cash flow margin, it should be the same, but a very nice thing is that it's a bit higher than the profit margin. So that's good. You want to see that from every single company. If you see high profit margin, but lower free cash flow margin, you need to find out why. So you actually need to go on their investor relationship page and read their entire like 100 or 200 page report and see why the cash flow margin is lower than profit margin, but it's not the case here, and that's usually good. So we're going to go on the low side. They should be the same over long periods of time, but we will go, let's call it with 1% higher, 7, 10, and 13, right? PE. Now, current PE, of course, is like 500. So you might be inclined to saying, oh, 50p is cheap for AMD. No, it's not. No, it's not. Market average, historical, since stock markets exist, it's 15. So let's put that in the middle, 15. And let me tell you what, we're gonna put it on the low side, 15, just to see what price we're gonna get. And let's go with 17 in the middle and 19 on the high side. That's the PE AMD should have in the 10 years of analysis, right? Desired annual return. This is affected by the price you're gonna pay today and the return you want to get. You can get 8 or 9 or 10% in the S&P 500. So because you're investing in individual stock that has more risk, also more potential. But let's say we do not beat AMD down that much. We go with 10% on the low side, 12 on the middle side, and 14 on the high side. And now we click the analyze button and we're going to get some numbers. As you can see, I already have the stock on my watch list at 40. Let's see what numbers we get. All right. So as you can see on the low side, you need to pay about $15. And I think that's what we got with the easy way. So maybe you can use a higher multiple here instead of 15, maybe use 20, but be careful. I think 20 is okay with AMD because it is a tech company, it's growing, but I would not use 20 for like Xerox or IBM. So this number gave us the low number here, because this is a better way, is a more granular way to calculate. On the mid side, we get like 30 to 35, and on the high side, 60 to 65. And if you think that's crazy or insane, I think AMD actually had these prices quite recently. And yeah, 52-week low was in October the 13th at 54. So maybe that was a really good time to buy some AMD, and you could have most likely got a good price there. But I generally want to buy when the stock price is usually below the mid assumptions. Generally, that's when I want to buy, and that's valid for like every single analysis that I do with the use of this software. So if you like this software, I'm gonna leave a link in the description below. It makes the job of investing really easy. That's it for AMD. If you found this video good information for you, leave a like, maybe consider subscribing. Also check their YouTube channel. You're gonna learn a lot more from them. They are a lot more knowledgeable, but I'm doing what I can, right? So see you next time.